Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. So the agenda for today, we're going to go through the market update. I'll do that, and then we're going to review the daily trades, the studies that come out. So I've been tracking those real close. So I'll do, it's for year to date through quarter three. So we'll go through that, and then Shawn's going to talk about some the analysis we've done on earnings trades, difference between different strategies, long call, bull put. And just a reminder, next week we will have the next earnings plan done and ready. So that'll be Q3. So yeah, so we're excited about that. We're keeping you guys busy. All right, let's get started here. Okay, overall for the market, not much change, from last week. All ones across the board. Last week we talked about Russell transitioning to state one, so that's still in state one. If you look at the overall, pie here for bullish states, we definitely had an increase. It looks like, the last day or two, it's kind of leveled off. So, but, I think Sadir had brought it up, a couple weeks back. It's always, the trades seem to always be working really well when that pie, the green pie is growing. So it looks like we kind of leveled out off, and we'll take a look at that. Just mute some people here. So we'll take a look at that, individually here. So let's dive into the market pulse. You can see state ones are up around 46. So that's kind of our normal overbought threshold, 45. So it kind of peaked right around there. Looks like it's turning a little bit overall. It's been a good kind of rally here as far as, the state modeling. The 8s have dropped, quite a bit from 22 down to 18. And then, we went all the way from 35 all the way up basically to 45. So up 10 points. Kind of looks like it's leveling off here. When we talk about the new lows, we've been flatlined since the previous week, and we talked about that. Anytime we're flatlined, that's definitely a bullish condition. We have had some I guess we call this the tremors. They're getting a little bigger each time. So that's something to keep an eye on. When those spike up, that's definitely some turmoil in the market. So what I want to take a quick look at is this bullish bearish. We look at this every so often. So you can see, we back in about a month ago, we just basically straight beelined up, and now it appears like it's turning back. So this is just the aggregate. The green line is all the bullish states, so 1, 3, 5, 7, and the red line is all the bear states 2, 4, 6, 8. So basically, it looks like it just kind of rolled over here. Something to be careful of overall in the market. I did find kind of another one here. Just looking at, these are the transitions, like each day. So you can see, like when we get a lot of spikes in those red ones, that's kind of where you can see the market dropping down here. So we did have a recent pop above there. So if it stays above there, then that's where we get these normal pullbacks. We kind of look at the other, like new lows really spiking. That would be something where outside of a normal pullback. But these are just kind of like nice little entry points for, further bullish runs. You can see them here. I mean, they're like kind of perfect, kind of cool. So that's just something that, keep an eye on too. They crossed over, are they going to keep rolling up? How much does the market drop down here? And then that's kind of what I see with the market pulse there. Any questions so far? All right, well, let's get into the modeling. So for SPX, this one, just gonna keep going and going.
Hey, Siri.
Siri. Sorry, muting. All right, so this one not giving us much. So what we've been tracking over the long term is this 50-day SMA. So obviously still intact. As long as this keeps bouncing off the support, the bullish run continues. So that's your main indicator that I would be watching on this, that 50-day. Bouncing off of that. Is it going to go down and test it again? We'll see. Looks like it. And as long as that holds, we're going to keep roaring higher overall. And everything that these drops are just pullbacks. And when it gets down to that 50-day SMA, as long as it holds, it's just a great buying opportunity for those short-term kind of trades. So obviously keep your eye on this. We've been preaching that for months and months. So let's look at the Russell. So the Russell went in state one, on the 30th. It's a good start. Obviously, the average path that these things go is kind of like this: test up, get to support, and then kind of roll up and then go down. So, it had a good start. I think the key level here is going to be watching this entry level. That's your key support. When we look at the previous state ones down here, it hasn't really been any kind of banner performance when it gets into state one, kind of a little bit higher. And we've talked a lot about the range bound that this thing's in. Sorry, I'm trying to get my tools here. So this is basically the range that it's been in since February. So I don't, until it breaks out of there, I just kind of watch it. But it gets in that state one during this, channel it's basically in, and it just goes sideways and sideways and, up and down a little bit, but that's, that range bound. So I think as far as big market picture, once this breaks out of the channel, that's kind of the overall direction. So, what we talk about as far as, what can, move the market lower, and, we talked about this a lot, is, inflation, the Fed. I think that'll be, outside of any like black swan event, that no one can predict. That would be, I'd say, the main thing that you're looking at. Inflation definitely out there. I definitely have noticed it a lot. Usually the Fed wants to get you at like 2%, so you don't really notice the inflation. But when your things go up, 12% or something over a short period of time, you definitely notice it. So definitely inflation out there. They're saying it's transitory. I beg to differ. But they're the one pulling all the strings. So just keep an eye on that. If they do even mention raising rates in the near future, that'll definitely drive the market down. Just think of back in the end of 2018, where they just started raising and raising, and the market just tanked. So So that would be one thing. The other I'd just look at is any kind of COVID type. They have all these variants now. The Delta, I think the Mu is the new one. There's something out in Brazil, another one. So this that could be another thing that if we had to shut down or something like that, that would definitely be another thing that would drive the market down. So outside of that, there's not really much. So, all right, so that's the overall market. Open up the questions, comments. All right, nobody? I muted everyone, so if you want to talk, you have to unmute yourself. All right, well, we'll keep on moving here. So that's your overall market. Let's go and we'll talk about the so this is what I do. This, you guys can do this too. I definitely recommend anytime you're tracking trades or you want to see how they do, you can track them in the virtual portfolio. This is how I separate them out, basically by the different strategies. So like Keltner pullback, the bull put, bull call. So we can pull that one up. So what I do is I make sure every time it comes out, I'm putting in at least 1,000 into the trade. If it's higher, then I still take it. So Roku's 4,000. Some are going to be a little higher, but at least 1,000 on each trade. And then I put them in, and then you can do your own trade alerts here. I don't know. There you go. Where you put in your profit targets, and you'll get an email when it's met, which is really awesome. So this is basically what I've been tracking for every single one of these. So, like here we have these open positions, and then, I close them out. This is all end of day. I'm not doing any intraday tracking. It's just way too much for each of these trades. So anytime, excuse me, it pops over, I will wait. There we go. 25%. If you're doing it live, and you put a limit order at 25, then you'll get filled right around there. So you do see some higher ones just because it closed higher than that 25% after the day. So but overall, that's how this is done each day. I track these every single day. So the results overall, we'll pull them up here and we'll kind of just walk through each one. If you guys have questions, throughout, just please unmute and fire away. Don't worry about interrupting me. I'm just going to go through this, and hopefully you guys are trading these. We've been talking a long time. These have been out since 2018. We first published these. We added a few new ones, the 1 year, and this other one down here, the iTrend, which isn't functioning properly. So I don't have data on that one yet. So it's not publishing each day. So, but we're working on that on the back end. So we go through and, talk about, we have different types. So we have a breakout. This is the iTrend, very bullish, is another breakout. So those are the two types of breakout trades. This one, the breakout, is only a long call. Obviously not the best. And we see this kind of across the board for most of them, like the long calls are underperforming. And, we had told the group, in the future here, we're just going to be moving to bull call, bull puts, maybe just one of them. But, we're still discussing that. So we're just talking spreads on these trades. The downside of the long call, you got to get it right in a fairly short order of time. And these other ones, you have time on your side. So, and, if it goes sideways, win. If it goes up a little, you win. If it goes up a lot, you win. Even if it goes down just a little bit, you win. But if it tanks, then that's when you're going to lose these two type of trades. So overall, the breakout, it started the year pretty strong, and then this kind of leveled off, and that's what a lot of people have been noticing, with the long calls this year. They just haven't been that strong. Years past, they're all kind of like right around this 75 to 80. So you can see some of the other long calls here, kind of subpar as far as what we modeled them for. Historically, they had to be over 75%. So, it may just be the current environment, but, we kind of like just, these kind of win percentages, 85, 98, 83, 89. This seems a lot better. And just measuring things as far as the metrics, most of your profit per trade is going to be a lot higher, and your win rate's going to be a lot higher for those bull calls. So, we still think long calls have a place. We're not sure. We're even talking about moving, like the earnings trades to spreads too. So long call, obviously, it's kind of I'll pull up the portfolio here. It's just like, you can see there's like 25 open positions. So, like all your winners close out, and you just have to kind of watch these other ones as they, hopefully, turn around. But, a lot of them are, getting near the end here. They're going to be losers. So you're hoping for like an earnings pop or something like that. It's a big move. But, you still had a ton of winners. So there's still good trades in there. I'd just say kind of cherry pick, the trades as far as what you see. But overall, that one is underperforming, I would say, this year. Just 2.5. You're still making money, but it's just kind of, I don't know if that's worth the effort this year, how the market's been performing. So the other one, Bollinger, the next one, Bollinger Band pullback. So this one doesn't occur much. I think last year it wasn't as strong, but this year, it's 3-0, nothing big thing to go through on that one. Sorry. So the 1 year, that's one of our favorites, and this one's done pretty strong overall, kind of modeling how it normally does. I would say this one's pretty much what you can expect on like average, throughout. We've been tracking these, since 18. That's kind of like the typical results, I would say, like that for these strategies. So some years are better, some, I think 1 year was really strong last year, and this year it's obviously the 5 years even, been the best performing like crazy. But if you guys remember, I told you multiple times, like when it has like when a stock comes in and it has the 1 and 5 year, that's always a good trade. So I still stand by that. So
Hey, Josh, on the bull puts, have you these bull puts, is this with the new transitions, or is it mixed?
No, these are all the ones that we still publish. So that, the out of the money, well out of the money spread, down near the lower standard deviation. This is what is still published. So we haven't, I've done some modeling on the, as far as the tests on the new bull put. So that's going to match pretty close to what this is, like the bull calls. So maybe slightly better win rate, maybe a little less on the total return. So it's just like a minor trade-off, but it'll pretty much match, this type of these type of win rates, like the bull call.
The bull calls or bull puts?
It'll match. It's pretty close to mirroring the bull call.
Okay.
Yeah. So this is like deep out of the, way out of the money. So, the risk reward on these can get pretty lopsided. Like where you're risking, 900 to win 100. So, we wanted to move it up. And, it's, if you think, and I'll show you real quick. Let's see. So the new one. So like the new one, if I did this like TSM, bull call, back when it was 118 and went into state one. So your bull call, you buy that 110 and sell the 120. So the bull put, you would sell the 115 and buy the 110. So you're basically, for the bull put, you're selling one strike below, and then you're buying right above the standard deviation. This one, you're buying right above the standard deviation and selling one strike above. So so that's the difference. So it's very close as far as the modeling, and your break even will be lower with the new bull put than at the current bull call. So just slightly different, maybe like $1 below. And the other kind of thing that we liked about it is, like when you get these big trades, you're not gonna, you could have a bull call that's like a huge amount, like 15,000 or something, if it's a high price stock type thing. So on the bull puts, you're not going to get that extreme type of spread, like where you're risking that much. So we like that a lot better too. And just the execution on the put side should be easier than, this could be problematic depending on liquidity, trying to buy that deep in the money call. If there's not a lot of open interest, volume down there, spread could get pretty wide. So we don't see that as, nearly as much trying to execute this kind of bull put. So, it's fairly close on the metrics of the results, but, I think a lot easier to execute that. So that cleared up for you, Russ?
Yeah, very good. Thank you.
Okay. Okay. So back to, and I'll post this in the share drive. So you guys, don't have to like take pictures or whatever. So where were we? Oh yeah. So the 1 year. So, we kind of made some new columns here, basically, the total return on risk. So, for all the money you put in here, 94, trades time your average risk. So we take the profit divided by that, and that's basically your total return on all the money you put in. And then, we're putting in that profit per trade too. So, basically how much we're making. So, if you remember last week, we had, some of the earnings trades, you were like 100, 200. I mean, some of these are like 600, 700, pretty high overall. And I think, obviously there's a lot of trades here, and, honestly, these are like systematic strategies. You gotta, we definitely advocate using the spreads, and, you just, follow that strategy when it comes out, and, your favorite one, or, it's a lot to do them all. And this is just the filtered ones. I mean, we have a lot more that, get filtered out from, the high probability screeners that we have. So even more available, especially like Keltner. I think we looked at that, and there's like 190 year to date for those. So a lot more trades we could push. We just kind of want, too much is a little overwhelming. So, but obviously go back to 5.
What did you mean by filtered out? I mean, are these the ones that are being in a high probability?
Yeah.
Or these are all the ones that come out?
No, these are just the high probability.
So what are the ones you're talking about that get filtered out?
Yeah, so like if they didn't have the proper win rate, below 75, if their profit factor was negative on their previous, occurrences, they didn't have enough occurrences. So that's the three things that we screen. Um, so, like if Bollinger Band, if stock came in there and it didn't have a previous occurrence, then it's not going to get into high probability. Or if it had like one occurrence, it's not going to populate in a high probability section. It'll populate in the raw data section. Sorry. So that would be, here's the like high probability ones. Here's the raw data. So these will be the ones. Let me.
Okay, so you're saying the high probability has additional filters versus the other ones is just raw.
Yeah. So like this one, okay, it only had one occurrence. It's not going to populate in the high probability sketchers, right? But this one would at 75, at least for, good profit factor. Yeah, that's what I'm
Okay,
saying.
I didn't realize that. I thought the upper bar is just some
Yeah,
additional.
that's the raw output.
Okay,
Yeah, that's everything. So, you could have one in there that's 0 for 10, but it'll show you everything. So, yeah, see, I'm not pulling up. There's not too many occurrences. I'm trying to. A little slow going here.
what were the additional checks that you do?
What's that?
What's the additional checks that you do on high probability that you mentioned?
Profit factor. So if it's below like 1.2, like this one is, then that would get filtered out.
Okay,
The win rate's got to be at least 75. So that would, 50 would be filtered out. It's got to have at least, I think, 2 occurrences. So, that one will get filtered out.
okay, very good.
Yeah. Okay. So obviously, the 5-year, obviously, crushing it, even with the long calls. So definitely one that you want to look for when it comes out. I think it came out today, right? Did one come out? No. Oh yeah, this is the stock one. Anyway, so 10%, obviously that's the only losing, trade we had is these long calls for, the 10% drop. Still quite a few active trades. So that means, yeah, let's pull it up just so you guys can fully understand. So basically, you could have like one currently, one trade that's currently a winner, but still active, hadn't met its target. But overall, there's, 7 as of 8:31. 3, 4, 5. So there's still 7. So, these are just basically waiting. So, they could turn some of those around, but, who knows? Overall, still the bull call, pretty, not the best win rate, really strong, return. But, we kind of like around 90 would be nice for everything. But, anything where you're making good money like that, 20%, our target's only 25. So anything, around 20 is really good in my opinion. So, and going through this, Keltner, pretty strong overall, in all 3, you know, this one, deep pullback, it's got a pretty bad win rate on the long call, same with the 1 year. But, if you look at the bull call, it's like 96% win rate. So, just more and more evidence to go with the spreads, and long calls are just tough. You got to get them right in a fairly short order. And, that's just makes more sense. If you're going for 25% on the long call and the bull call, I'd just say, why not just do the bull call, right? So, because we're not like trying to target like 100% or something crazy, so, overall, just kind of walking through these. If you guys have any questions, just pipe in. It just kind of, everything is fairly similar, just really strong on the spreads and kind of wishy-washy on the long calls. Only one real loser there, which it just, speaks to how well, a strong bull market. We haven't had any like really big corrections, knock on wood yet. So, this good, they're great ideas. You guys can pick which ones you like. You usually see a trade at least a day. Sometimes we don't, but most of the time you're going to see a trade. So those are there, and hopefully you guys are using them. Is anyone actively trading these or tracking them?
I trade most of them. And, I think what you're showing here is what I have found. I mentioned to Shawn that I don't do straight long calls anymore.
Yeah.
I found in real life, they just don't work as well. But the bull calls and bull puts do. And there's many trades that come out in the studies where I will do both. I will do the bull call and the bull put.
Oh, really? You're doubling up?
Yeah, I will. And it works pretty good. So, I think your data, of course, now because of schedule and other things, I don't trade every single one like you're showing here. Mm-hmm. So your numbers, your number of trades is higher than what I actually have the time to execute. But you're showing essentially what my experience is that, I've given up. I don't do long calls anymore. I just do bull calls and bull puts.
Yeah.
So, and even when if it comes with a breakout and it says the long call, mm-hmm. I don't actually enter a long call. I do a bull call. and so and your data is just kind of verifying what my experience has proven to me.
Oh, that's good. So you're a rich man, huh?
Oh, I wish. Yeah, but I do make money at it, so I can't say I'm rich.
That's the point. Yeah.
Yeah.
So. Well, thanks, Adir. Is anyone else out there doing this?
Yeah, this is Dave. I follow and I do the trades when they happen to be in the industry groups that I typically follow. So I guess I'm selective in that way of things that I'm normally watching. When a trade pops up there, to say, oh, that's in kind of the group that I've been watching, and I look at it closer, and I usually follow that trade or do that trade, but I'm not tracking them all.
Right.
And quite honestly, a lot of times I'll look to see what the recommendation is, and I'll also do if implied volatility is low, I'll probably put on a calendar trade that is like a preemptive strike into where that is going, where that might be going, when it gets closer to earnings. So. Mm-hmm. So sometimes I have a couple of trades on the same underlying, one a kind of like a lead into a trade that I'm hoping will set up based upon where things are, and hopefully a IB rising, because that's what I say when I usually get into them. It's really, really low. So that kind of thing. But I'm not tracking them, and I'm trying to see if there's some sort of pattern there, but so far I can't, I haven't found anything that's worth conveying to the group to say, yeah, you might want to follow this, because it's still kind of a weird environment out there with the pandemic still hanging around.
Yeah, yeah, the gift that keeps on giving, right?
Right, but like Sadir, I'm making some money, just not consistently all with the same kind of idea all the time. So it's a it's a little bit of a gut feel for a lot with some probabilities on my side is the way I try to trade.
I will say that, one of the things that I will give Delphian props for is that you guys share these statistics, and other services I've signed up for and dropped in the past don't. And these are very helpful stats, and it helps modify my trading and the stats that Shawn shared on the earnings.
Mhm.
And so I really appreciate you guys doing it and being open to also some adjustments on your side. And I think that the trades become, the recommendations in the daily studies and the alert become better and better because of that. So
Yeah,
appreciate you sharing this stuff.
yeah. Well, we definitely want to be, forthright and, show you everything. We're not trying to pressure sale, obviously, into buying a products for your life, like some outfits. But yeah, we definitely appreciate the feedback. You guys have definitely, helped a lot, as far as the platform and things like that. So we really appreciate and your feedback and contributions. So thank you.
Yeah, and the other thing is, this shows the difference between a back test and forward, right? You could things back test well, but the reality is, and I think the Delphian platform is more complete than others, but the reality is that no back test database can contain every variable in the world.
Right.
And so when you actually go forward and try and trade it now you're dealing with the real market with all the variables, right? And your results are always different. Murphy's Law says they're usually less successful going forward, right? So I think it's important that you guys do this, and I plan to download the file and look it over. It's very interesting information. So thank you for doing that.
Yeah. Well, thank you all. We appreciate contributions and the discussion. So.
And I just want to follow on with what Sadir said there, that I think Delphian enables its followers to have the least risk at risk when you're making trades if you're following your advice. So that's where I see the kudos is if anybody follows Delphian, I think they're less at risk than any other systems that I've seen out there. So kudos for that. So thanks.
All right. Well, thank you guys. Does anyone else have any questions before we give Shawn his time?
Are you planning to add any additional strategies besides like the stay 2 target 3 or anything else that you've done in the past?
Yeah, I'm always working on stuff. I mean, we have so many trades now.
Right.
It's I'll probably do like a state 1 entry type thing. Those seem to be really good overall, because I don't know if people are going into the state transitions and testing those, but if we can do that automatically for people, I think that'd be like another good breakout study. But there's other ones kind of in the hopper type thing, but I think Joe said we have tons of trades already. So yeah, so
What's his favorite trade?
Yeah, one thing that I might just suggest is like an index strategy that, I mean, all the strategies are for individual underlyings based on statistics, but maybe maybe, you know, an IWM or one of the indices or sub indices, because Russell's got 2 or 3 groupings of it, you know, might be interesting for some people that want a more smoother, less volatile set of outcomes.
Yeah, that's definitely a good point. Yeah, we've been talking about that for years, you know, expanding the ETFs, just a matter of, you know, getting the time to build all those. But yeah, we shared a few of those strategies, you know, like
I'll bet people are trading them unbeknownst to you that we haven't talked about much, but just saying, I trade them not as frequently as underlines, but fairly frequently. So
Yep.
it'd be interesting to hear what other people might be doing and sharing there.
Yeah, we'll definitely roll out some ETFs. I mean, that would be a lot. Yeah, we'll definitely roll those out in the future. I'm not sure when. So, all right. Well, thank you all. Hope you got something from this. I'll post it to the share drive, and we'll let Shawn get going here. Thank you all. Go ahead. You there,
Thank you.
Shawn?
I am. Yep. Can you hear me?
Yep.
All right, good deal. I'll share my screen. So let me share. Let's see. So this has come up. So kind of piggybacking on what you guys were just talking about real quick. I know I'm going to talk about the earnings just kind of briefly as well, just some other analysis that I've done, but kind of piggybacking on what Josh was talking about regarding like the, you know, the S&P and SPY being above that 50-day SMA, and then you guys talking about using those ETFs and trying to come up with some trading strategies based on that. So, you know, always remember too that, you know, the trades that we're putting out are things that we've back tested within the platform, ideas that we've come up with, either, you know, working together, working with a group or other people or whatever. And you can always do the similar, you know, design, trade setup, strategy, and things like that within Delphian and back test and get, you know, some of your own data and just try to run with it that way as well, just making sure that the analysis matches up with your investment profile and what you're wanting to do. But, you know, we've talked about a similar trade setup like I'm showing here. I'm still running the data, so I was hoping it'd be done by the time we talk, but by the time I started talking, but there is a lot of trades that are going to come up in here. But, you know, this is one that I've talked to a couple of the members back previously, and we have talked about it on these calls before as well. You know, using these little dips in the market or using the, you know, the SPY market to really just come in there and buy, you know, either a long call or sell put spreads or buy bull call spreads and really take advantage of kind of this bull market. This back test really takes into account that percentage move like we've talked about, so this price percentage change, but it also takes into account the SMA like Josh has been speaking about. So every time, you know, the SPY closes above the 50-day SMA and there's a certain price change percentage move, both of those, once both of those meet on the same day, it's going to create an entry for a trade. And then I can go back in time and obviously back test and say every time that's happened, you know, if I purchased a long call or if I sold a put spread, you know, would I make money over time? So you can always do a back test like this. I would, you know, highly recommend to restructure a trade design like this or a trading strategy and see if it works. You know, when we've showed it in the group, I think we showed a pretty narrow time frame of, you know, like 2021 or 2020. You know, and this trade here only, you know, this run one is only for 2021. So as we've seen with the chart Josh shows, it's pretty, you know, consistently going up above that SMA. And so obviously you can see the win rate here is reflective of that. But with the run two that's in yellow, I did a bull put strategy, but I not only did it for 2021, but I tried to go back all the way to 2018 just so I could kind of get that market environment in 2018 and show you guys, you know, how those years, you know, separate in the results that are there. So, you know, that being said, you know, I really want you guys to take advantage of Delphian, run those tests on the, you know, indices or the ETFs that you think you might want to trade. And, you know, I believe if you do, you'll find some good ideas and some good strategies to work with, you know, kind of moving forward. So, but anyways, the run two was a bull put, similar to what Josh is talking about on the new trade designs that we have. And, the win rate was 100%. So I went back further, and I'm just trying to do those past years. And two, these trades are cumulative. So you are in multiple trades at the same time. So if the signal goes off on Monday, you're going to buy or sell a spread. And then if the signal goes off on Tuesday, you're going to do it there as well. So you could be in multiple trades at the same time, just with the way that this is set up. So simultaneous is actually what it says, not cumulative. So I just
Hey,
wanted to
Shawn?
show you guys that and let you. Yeah. Yeah, Bob.
You sent me a step-by-step instruction on this overall idea. It was excellent. I just wanted to take a minute and say thank you.
All right. Well, I appreciate it. Yeah, no problem, Bob, at all. And I don't mind doing that for you guys too. And those are documents that, we're doing some work on the website and on the platform. So once everything is kind of settled and, all the fields are in the appropriate areas, we're going to be doing more documents like that. So hopefully everybody can follow, the back test step by step and things like that. So, we've worked hard, Joe, Josh, and myself, and Josh and myself too, over the years of basically taking something that was fairly complicated, in my opinion. To run a back test, you had to know exactly what you were kind of doing and making it easier. But I still feel that there's some areas in there that we can improve on. And so, anytime I can help you do that and provide a document like that, I don't mind doing it, because I think hopefully it's going to, spur you with more ideas and then ways that you can, improve on back tests going forward as well. And not only help yourself in trading, but, help us too. So cool. But so I recreated that. So this is still running. So, if it completes later at some point, I'll, and if you're interested in getting the data, I'll share it with you. I'm just trying to do a different strategy and to run it through 2018. And then I'm going to actually extend it back in time further. It's just going to take some time to do so. So just wanted to kind of run that. But please take that information Josh provides, the movement in the market, plus another indicator like an SMA. And once those two indicators come together, you can say, hey, now I want to buy the stock, or now I want to sell it, or whatever you want to do. And you can run a back test that way. So you can only have, you might have one, you could have two like we have here, you could have 3, 4, 5, how many ever you want to put together. So you can do that with the back test. So cool. So any questions on that, anyone? All right, cool. So that was just a side note on what Josh was. Yes.
I do have one question. It took me a while to get to installing the step-by-step that you sent me. And I pushed the go button this morning about 11:30 local. So 12:30 your time. It's
Right.
still running, showing highlighted runs are in progress. Is that normal, or am I hung up somehow?
It might be hung up. I'll send Resham an email after we get off the call to see if she can go in there and see what's pulling it. Did you run the entire range, or just the same range that we did on that document?
On the document, it was 2018 to current. That's what I ran.
Okay. Yeah, it shouldn't take that long. This one is about the same time frame, and it's taken a bit as well. We are transitioning some stuff over to those new servers, so I don't know if that is causing the hang up or not, but I'll verify with her and just make sure and see if she can help push it through, depending what it is. So
thank you.
But no, it shouldn't take that long. And typically what I'll do is, just for everybody on this call too, if I don't know how many occurrences are going to come about a particular back test, I might run a smaller date range first, just to get a result back. So if I run a time frame of 6 months on the back test, and let's say I get 2,000 results back, then I'm like, okay, so I know if I run 15 years, or longer, right, that might be a problem. If I'm getting, 2,000 trades for 6 months, 15 years, is obviously going to be a lot more than that. Or if I get one trade for 6 months, then I say, okay, well, maybe I can run the entire range pretty quickly, because there's probably only, less than 50 trades, if that. So I try to run a smaller range and then expand it from there. So that's just a side note. So cool. Yeah, I'll get back to you on that, Bob, and just I'll shoot you an email later today. If I don't, please send me an email to remind me. So but we'll see if we can get that taken care of. So other than that, what I wanted to show you guys, are the earnings results just for the bullish pre-runners. This is just kind of some preliminary work that I was doing, looking at some of these other trade rules or trade designs that I had within the virtual portfolio for the bullish pre-runners. So I got it done this morning, so I just wanted to kind of share it right now. Column B here is the long call, and we've looked at this one previously. Last week you looked at it. It did change a little bit because we did have one open trade. That one trade was a loser. So you can see that trade shifted my win percentage down, I believe, from 78 to 74%. And then we can see that that dropped down my total profit as well a little bit from the previous. One thing that I wanted to show you mainly was really just column C and column D. So column C is a bull call spread. So similar to the bull call spread like we're doing within the high probability trades. And then column D is the new bull put spread. It's similar to what Josh has put out, but I had one adjustment that I did when I actually was testing it. I actually sold a strike that's in the money. I'll show you an example of that in a second. So the bull call spread is basically selling a strike. So the call that you're selling is one strike above the current market, and the strike that you're buying is one strike above the lower standard deviation. That's our bull call spread for column C here. The main difference that you can see is obviously we got an increase in win percentage because we did win 2 more trades. So we were able to win 2 more trades for column C, the bull call spread, and we did increase our win percentage by 10% up to 84 by doing that. But you can also see our profit factor increase from 3.11 to 4.76. But one big noticeable difference that Josh mentioned earlier is our capital at work, or our risk in the trade. So I tried to make sure we kept them at $1,000 at least risk, but we can see that when we did the long call, the most expensive trade was $18.95, but the most expensive trade on our bull call spread were risking $72.45. So a huge difference when you're talking about risk per trade. And Josh, like I said, he had mentioned that earlier. Once you average it out over the trades, though, it did come down a bit, but we still are more expensive than our long calls, $18.92. So you're roughly talking about 33% more expensive or more at risk when you're doing that bull call spread. But again, you are buying a 30 delta, which is an out of the money call here, and you're buying a bull call spread here, which is you're pretty much buying a bull call spread that is completely in the money. So, you know, difference in break evens. There's a lot of differences that go in there when you're talking about details of the trade. But, you know, that's one of the big differences that I see here is our risk per trade when you're looking at that. Column D is our bull put spread. Now we can see with the bull put spread, we were able to increase our profit factor from 3.11 to 6.37. So double what our profit factor was by just changing the trading strategy type. And our win percentage here is at 89. So we actually were able to make up 3 trades here from the long call. So 3 of the losers from this group went to the winning side, and but we still do have 2 losers for the 89% win rate. I don't have the capital here. I still wanted to at least risk $1,000, but I got to try to figure out the maximum risk per trade, and there's a little bit of a different calculation to do so. So I didn't have time to get that done for you guys before the call, so I apologize. But we can see that on this bull put spread, I highlighted a line in yellow. So this shows you that a line, this is the bull put spread. So we are receiving a credit for the trade. So the credit for this trade is column M here. 34.50 is our credit. So we received 34.50 for selling this put spread. Now we can see the put spread has $100. So we basically sold the 620, bought the 520. So that's $10,000 worth of risk between that. But when you take your credit into account, you take in 10,000 minus your 34.50. Now your risk on the trade is $6,500. So we can see that still a decent amount of risk on a trade, but you know, at the bull put spread here versus the long call versus the bull call. So there's a couple different, you know, factors that you want to take into account when you're looking at these trades. Now I mentioned that this one's a little bit different from what Josh was talking about. When I constructed this one, I constructed it as selling. So the put that I sell is going to be one strike above the current market. So it actually is going to be this put that I'm selling is in the money. So if you look at this trade, column C is my entry stock price. Stock price on entry was 616.79. I sold the 620 put. So that put is in the money by, you know, roughly $3.21. So I sold the put, one strike that's in the money, and then I bought the put, the 520 put was one strike above the lower standard deviation. So that side of the trade is exactly like what Josh's been talking about. It's just the 620 puts, just one strike above the current market price when I'm doing that put spread. So I'm going to run it like Josh has mentioned as well, by using one strike below, which in this case might be the 615 put. But I gotta go in and verify that to make sure that I'm running that same analysis. So, you know, what I wanted to show with that trade.
So Shawn,
Yeah, go ahead.
before
Yeah.
you leave that, sorry for interrupting, but while you were on that, one strike in the money that you were selling, tell you the truth, I've done that a number of times too. How far out are you going?
60 days.
60 days. Okay. Yeah.
Yeah.
I think that
Well,
strategy, and I use that especially when I think there's some news that has affected the stock price in one way or the other kind of unfairly. That's when I go that way, go one strike in the money that I'm selling. So, and I usually give myself at least 60 days, more, sometimes closer to 90. So as long as you give yourself time, I think those trades work out more often than not. Pretty good. Just saying.
Yeah, no worries. Yeah, and remember, these are for the bullish pre-runners. So based on our screener, we're expecting the stock to make at least a 3% move, you know, coming into the earnings announcement. So we're really looking for the stock to increase in price, you know, prior to the earnings announcement, and then that's why we're doing these bull put spreads. So, you know, we are looking for that stock price to go up. So that's why I sold the one in the money, and I think Ashok has talked about it before. You know, typically those are the options that have the most intrinsic value, so you're going to get the most value for selling them. But Josh's strategy and this one are fairly close. I just need to adjust it a little bit. I think with Josh's strategy, my credit is going to be a little bit less expensive, but then my risk is going to be a little bit less as well. So overall, I don't think it's really going to impact my profit factor to a huge extent, but I still want to, you know, like Josh said before, and Tazir mentioned too, I still want to, you know, make sure I'm showing you guys everything that I can show you so you can compare, you know, everything that we have available and not just kind of try to make it look like it's one-sided. So.
I think it also
Yep.
will work really well for the bull runners just post earnings, especially if there's a a move in the market that that stock gets sucked up into, you know, that day kind of thing, then
Right.
then I think it works pretty well for that class of you know, after earnings too.
Right. Yeah, and those are the ones that we're trying to see if we can you know, change some of those strategies on. So the bullish pre-runners, you know, the bullish runners and the bearish, you know, runners if we can. So try to get those strategies to where, you know, we can get a little bit of a higher probability type trade or a higher profitability type trade by using these spreads. And again, I mentioned it last week. I might have mentioned to this group, I really thought these bull put spreads using it under this bullish pre-runner strategy was not going to work. I for some reason, whatever I've done in the past made me believe that wasn't going to be a successful strategy. And running the test, talking to Satir, talking to other members of the group, I mean, the numbers are what they are, and it seems like it's a viable strategy going forward. And I was wrong to assume that it wouldn't make money. So, you know, we see the results here. So that's what we're looking at. So I wanted to show you guys. And, you know, one quick thing, you know, really quick as a side note, and what Josh is talking about, the strategies being fairly similar. If anybody knows this, or, you know, we need, you know, more education on doing this, figuring out your break evens. If I looked at this aligned trade, you know, 620 to 520, break evens roughly around the 580 range. So, you know, I get $35 credit. So basically my break even is right around that 585 range. So if the stock starts going down, you know, 585 and below is my break even, and then I start losing money below that. If you look on the opposite side of the trade, which is the aligned trade for the bull call, it's a similar setup. You know, it cost me $72, you know, but I'm buying a 510 call. So 510, you know, plus the $72 that I paid for the spread is roughly 582.50 or 582.45. So 585 and 582, you're talking about a break even. My break even is pretty similar on my bull call spread as it is on that bull put spread. So the trade setups are pretty similar when you're looking at the numbers that way. You really just want to start looking at your risk and your profit factor and some of those other metrics. You know, those are where that's where you're going to see some of those differences come into play, and that's where I think you can make some better investment decisions for yourself. So, any questions on that? Yes.
On the bull put where you're starting much closer to the money, if I recall, your target is 25%, right? Not 80% like in the bull put that's closer to the standard deviation.
That's correct. Yeah, 25% of your credit.
Yeah, okay.
Yeah, so a little bit different. And you know, anytime you're, you know, when you're buying a spread, and you know, obviously it's pretty straightforward, right? Well, even then, sometimes it's not so straightforward. But you know, you can look at your profit, you know, one of two ways on the bull call spread, and then on the, you know, on the bear put spread or the bull put spread, excuse me. Yeah, that's what we're doing. We're looking to receive a certain percentage of the credit that we get. So this credit that we received of $34.50, we're looking to receive at least 25% of that credit as a profit. And what I mean by the bull call spreads is some people, when they're buying a bull call spread, if you know, if it's a $10 spread and it costs $500, some people say, you know, they're wanting to make a certain percentage on the risk, so on the $500 that they're risking. And some people say they want to make 25% on the $500 profit potential that they can make. So a couple of different ways to look at it. Just make sure that we're clear on, you know, what our profit that we're looking for is. So whenever we calculate it and put that into our live trading accounts, you know, we're not searching for a profit that wasn't, you know, type that wasn't back tested, if you will. I hope that makes sense. So that's the brief summation. There's a couple more trades that are open with some of the other earnings types. So once those trades are done and completed, I'm going to have all the results done and posted for everybody. But all these bullish pre-runners are done. So I, you know, as long as everybody else is good with it, I might post those up in the shared so we can at least look at the bullish pre-runners. But you know, I hope to have them all in there prior to next week's release. So as long as all those trades are done, I think there's one or two more that are outstanding that we have to put in there. So if no other questions, that's all I had. So thanks, Josh.
Yeah, thanks, Shawn. Those numbers look a lot better.
Yeah, right. I totally agree. And this matches up, you know, and Sudhir, you had mentioned, you know, that double almost in profit factor by using those other strategies, and we can see, you know, column B to column D. I mean, it's a little more than double, which was interesting to find that same number like you had spoke about. So I was happy that I could kind of replicate that by using the virtual portfolio. So
Yeah, thanks for doing that.
Yeah, so next week we'll be implementing all this new stuff for the next earnings plan. So hopefully everyone can attend that meeting, and you know, thank you all for your participation and feedback. We greatly appreciate it, and you know, thank you for attending.
Thank you.
thanks, everybody.
Good meeting.
Thank you.